Thank you, everyone, for taking time out of your day. I'm sure some of you have some better things to do than hear my voice, my raspy voice, and see my beautiful face, right? But again, we really appreciate Ramez and the IRA Club team for allowing us to be a part of what they're doing. Ramez indicated particularly share our opportunity PRC Equity Fund. This is a public fund that's available to both accredited and non-accredited investors. You do not have to be accredited to invest in this opportunity. And I think once I go through the presentation, you'll find the value in not just PRC Equity Fund, but what Pioneer Realty Capital is doing as a whole. I'll just fast forward a little bit, although Ramez has given us a brief disclaimer. Here's our disclaimer. It just lets our investors know that we're not a fiduciary by virtue. We are not financial advisors. And as Ramez indicated, we encourage our investors to rely heavily on their own financial advisors, attorneys, or whomever assists in making those financial decisions for these investment opportunities. And again, my name is JC Shelley. I'm the VP of Investor Relations. Charles Williams is our owner and managing member. And as Ramez indicated, he had some surgery done recently that he was unable to attend today, but he does send his gratitude and his appreciation for all of our attendees on today's webinar. So again, I thank you. PRC Equity Fund, investors have an opportunity to earn an annualized 10%, and that is paid monthly. And with this opportunity, we really had the retiree in mind because a lot of retirees depend on that monthly income stream to survive. So we created the fund with a few nuances in place with the retiree in mind. In addition to the annualized 10%, investors participate in a 70% profit split. Now, I want to point out a couple of things about this opportunity for you to consider. As Ramez indicated, this is a Regulation A fund, again, available to accredited and non-accredited investors. But even more specifically, it's an evergreen fund. So this fund remains open indefinitely. A lot of investors like to know, well, what is my exit? If I need to get out of this opportunity, how do I do so? Because this is a publicly traded security, just like if you own stock, you would simply sell that security. And right now, our broker dealer is Texture Capital. So initially, the security would be exchanged over Texture Capital's platform. But as the asset value in the fund grows, subsequently the value of your security grows. But as the value in the fund grows, we'll be able to trade these securities over the more major markets, the more major exchanges like the NASDAQ, the New York Stock Exchange. So that Go ahead,
No,
Ramez. I'm sorry.
JC, I didn't want to intrude, but I want also people to understand. You mentioned your broker dealer, and I'm
Mhm.
asking the question. So, when you work with a broker dealer, are they doing the due diligence on behalf of the company? And what does that like entail? I know maybe you may not know the answers to that. I've asked Charles in the past because most people don't understand how difficult it is to actually get a Reg A offering these days.
Yeah, I'm glad you asked that question. And that goes back to a point that you made earlier that most companies do Regulation Ds, and those are available to accredited investors. To get a Regulation A qualified, it is a pretty strenuous process. So we were successful in doing that, going through the SEC, getting the opportunity qualified and offering it to our investors. And what's required with this opportunity is having a transfer agent, which also provides our technology. In our case, that transfer agent is Core Transfer, Core Connects. Additionally, we have to have a broker that oversees the compliance of our fund, and that is Texture Capital. And that's important because they also do what's called a KYC or Know Your Customer process. So they go through, review our investors' information, make sure that we're not doing business with criminals, terrorists, or anything like that. So that's why it's important for us to have that broker and also ensure that we remain compliant. So when we market this opportunity to investors, when we publicize it, there are so certain rules and regulations that we're bound by, and that broker dealer ensures that we remain compliant. And it's in an effort to protect the investor as well.
And keep in mind, ladies and gentlemen that are listening, that are IRA Club clients, you know, they, as a regulation A, we always talk, I always talk to my JC, and I'm actually referring this to you. I always
Mm-hmm.
talk to our clients about make sure they do their due diligence before they jump into do background checks on principal partners. Make sure that you have a checklist of these 10 things before you jump into it. When it turns out the broker dealer is doing the majority of that work for you, because
Absolutely.
you guys have to disclose every dollar that comes in, right? Every dollar
Absolutely.
that's paid out, where the money's being allocated. So that is kind of a really big deal that most people, I want them to realize. And I prefer that when I work with a lot of these companies on the sidelines, I ask the question, do you work with a broker dealer? So that way I know some sort of due diligence has been applied to any company, not just Pioneer Realty Capital. It just puts a little bit of more at ease, if that makes
Absolutely.
sense.
Yeah.
So
Yeah.
I got some questions that I did pop up right off the bat. You guys are not wasting time. Can the dividends reinvest if I'm not of age, of retirement age? Can you reallocate those dollars, or they must come back to the IRA club?
They
JC.
they do have to go back to the IRA club, but you can reinvest those dollars. Right
Yep.
now, there is not an automation process. But just to your point about the broker dealer, all every investment goes through approval. So, in an effort to make sure we remain compliant, it does have to be reinvested, and it is manual. Right now, it's not automated. We've
And
asked, and there may be in the future an opportunity to do so, but as of right now, it is not automated.
so if I'm looking to invest fully taxable money, we use the broker dealer. So if you're using your personal dollars, yes, you would use the broker dealer. But if you are using your Roth dollars, as you indicated, yes, you would have to go through the IRA club, because we are the ones administrating and releasing those dollars when you do the investment directions form. This is the part where you have the conversation with JC, and
Yeah,
he'll
yeah.
be more than happy to walk you through that process. Hope that answers your
Yes,
question.
I'd be happy to do that. Much like your typical real estate investment, if you're investing in a ground up development, it may take anywhere from 36 to 60 months to realize that return on that investment. In the fund, because it's an evergreen fund, you're not just getting that 10%, and you're not just capped off at a certain return. For the lifetime of your investment, you're getting 10% on your principal and participating in that 70% profit share every year. Now, the profit share is dependent on the performance of the fund. So, based on how we perform, that 70% can fluctuate, but that's where you get your most bang for your buck. So let me go through the presentation, and I think what I just said will make a little bit more sense. So PRC Equity Fund is it was designed for us to be able to provide pre-development capital for student housing, off-campus student housing projects. We developed a property in Prairie View by the name of 625 at Prairie View, and we cater to the Prairie View A&M students. But what we learned is Prairie View A&M University is part of the Texas A&M system. The Texas A&M system is comprised of 11 universities, and many of those universities, just like Prairie View, are in smaller tertiary markets. And that created a natural barrier of entry, but an opportunity for us. Many of our larger developers, or what you might consider our competitors, number one, they don't have a need to develop in these smaller markets, and they don't have an appetite for it. They already have their hands full in the primary markets, developing in these MSAs, these larger metropolitan areas. So it's no need for them to come into these smaller tertiary markets to develop. But what we found out, many universities like Prairie View A&M really have been sitting there waiting for someone to come with a viable solution to their problem. So there's rising demand at these universities, but very limited supply. And that's why we're bringing this group, Redstone Residential, on board to help us keep up with that demand and bring even more value into the fund. So there is very limited supply for student housing, but rising demand. Enrollment is still increasing at these universities. So what we're doing is entering into some type of partnership with these universities And you'll see in just a moment, we can do that through a master lease agreement, an affiliation agreement, or even as little as a letter of support, whereby the university states that we're lessening the burden of government in that area by providing student housing. But we're doing this through public private partnerships. This strategy isn't anything new. This isn't something that we've come up with off of the top of our heads, but public private partnerships in essence, it's a pretty dated strategy, but it's becoming more popular. And one of the reasons being, with our presidential administration, a lot of the executive orders that are being put in place, a lot of the defunding that is happening at our universities. Uh, University systems like the Texas A&M rely on income from what's called a PUF, or Public University Fund. But the thing about that PUF fund is those dollars can only be used for educational purposes. Now, one might think that you can use those funds for student housing because isn't that associated with students' education? But they cannot. So millions of dollars from land that is leased out for grazing, for oil and gas, for a number of things is what provides a pretty good chunk of income for the Texas A&M system and the University of Texas system. But that those university systems cannot use those dollars to fund student housing development. So with that factor, with the defunding from the government, universities will have to rely on an alternative. And one of those alternatives is public private partnerships, whereby we have the ability to build student housing development, eliminate a lot of bureaucracy, and get things done a lot quicker versus if the university were doing it itself. So we do that. So the fund, again, was created to provide pre-development, or what we call pursuit capital. So we'll meet with the university, establish an opportunity, if there's an opportunity actually there, determine some type of partnership. And all the way, our goal is to close on a bond transaction. Now, we typically don't like to get into the weeds with the bond transaction because there are some complexities there that could muddy the water. But more or less, the bond is what provides the financing for the development of the project. And I think over the next few slides, you'll see how we're able to do this. So, number one, we meet with the university to really try to determine, again, if there is even an opportunity there. We try to know what their needs are, what the students want, is there a timeline, and what those interests are, and figure out if we can do it. We certainly, while we've been in the industry for now going on our 23rd year, we like to think we know what we're doing, but it's not a one size fits all. We really try to understand what these universities need, meet with them, and understand if we can develop what they want and meet the timeline that they have. So after we've met with the university, we'll determine if there's a partnership agreement. We'll work through that in some form or fashion. And again, that may be either through a master lease agreement, an affiliation agreement, or a letter of support. And once we have that master lease agreement, then here's where PRC Equity Fund comes into place. It provides that pursuit capital. And I want to point something out. If you take a look at the bottom in very small print, it says that no funds are deployed until a letter of intent or a letter of interest is received. And that's important because as we go out and try to bring in these projects, we want to make sure that the university understands from day one, our ultimate goal is for us to enter into some type of partnership agreement. If we're taking on the risk of deploying this capital without the university having to put forth any debt, we need to understand that you understand that's the ultimate intent for us to enter into some type of partnership agreement. And that letter of intent states that if for whatever reason they decide not to move forth, they have to refund PRC Equity Fund whatever capital it deployed. Now, again, this is not your typical real estate development. This is a fund. PRC Equity Fund was created to provide that pre-development capital or pursuit capital and bridge us until we close these bond transactions. So pre-development costs can include acquiring land, getting third-party reports completed, like your appraisals, um, getting design consultants involved, your architects, engineers, civil engineers, and getting legal counsel. All of those costs are pre-development costs, and it's exactly what PRC Equity Fund was created for. And this is important because when we close on the bond, in most cases, with partners like Morgan Stanley, the value of the bond will significantly exceed the cost of constructing the project. Now, you might ask, how is that possible? Well, what Morgan Stanley does is they take the future value of the cash flow that that asset is going to generate and they assign a value to it. So just like with a property, if it had an NOI or net operating income of, let's say, 2 million, you would divide that net operating income by a cap rate. And the market determines what the cap rate is for any particular asset. So you would take that NOI, divide it by a cap rate, and that would tell you what the value of that asset is. In this case, while it's similar, Morgan Stanley is taking the value of that future cash flow and dividing it by, in this case, a yield of the bond, and that gives us the value of that bond. And what happens when we close on that bond? It takes anywhere from 6 to 9 months to close on the bond. For instance, if we deployed, let's say, $3 million in pursuit or pre-development capital, PRC Equity Fund has deployed $3 million. 6 to 9 months later, once we've closed on that bond is going to refund PRC Equity Fund at a 2x return. So if it's deployed $3 million, PRC Equity Fund is going to get $6 million back. So that's one income stream. Again, those bonds provide the development capital for these projects. So providing the development capital in our case, and this is a real case scenario, our property at 625, we're going on to develop in our second phase another 454 units to the existing 120 units. For this second phase, for those 400 plus units, it costs about 75 million for us to develop this phase two. But the value of those bond proceeds is going to be about 101 million. So again, you may ask the question, how? So they're taking the future cash flow that this phase two is going to generate over a period of time, and they're assigning a value to it. So just like if you were renting an apartment or home, typically in an apartment, you may have a lease, 12 or 24-month lease. And even before you enter into that lease agreement, that landlord will do a background check. They'll do a credit check. They do their best to make sure you have the ability over that 12 or 24 months to pay back whatever that rent is based on your rental agreement. In our cases, it's very similar with the university. And think about it, we're working with the Texas A&M system in one case. Like they say, everything in Texas is big. But Texas is, according to my research, and it may be a little bit dated now, but it's the seventh largest economy in the world. That's just Texas alone. Texas generates one of the highest GOPs in our nation. The university or the Texas A&M system is one of the top university systems in the nation, one of the fastest growing, most popular. Enrollment has, while it may dip a little bit, it hasn't dipped significantly enough to affect the need for student housing. And it will not, at least to what we've seen, it will not slow down at least for the next 10 to 20 years. So for us, that's job security. For our investors, that's longevity. But you may ask, why is that important? That's important because as we continue to do these projects, there will continue to be demand. This is an evergreen fund. So we'll have a number of projects, a number of transactions that are being completed inside of the fund that are generating that value for our investors. So while we're headquartered in Texas, so right now that's our primary focus, but bringing partners like Redstone Residential on board, this allows us to expand our portfolio to opportunities across state lines to continue to bring that value inside of the fund. So as we like I said, if you have an apartment lease, you may have it for 12 or 24 months. And with a high degree of certainty, that landlord or apartment community knows that you're going to pay. With the Texas A&M system, the Texas A&M system is a $7.8 billion credit rated tenant, and they're backed by the state of Texas. So that's important because all of these great factors about Texas, it provides us a high degree of certainty that we're going to get paid, and Morgan Stanley and their bond investors are going to make their money on the other end of that transaction. So that's how they're able to fund these deals that we're doing through bonds. That bond plays an important role, but it's backed not just by the Texas A&M system, but by the state of Texas. So if you got a question,
Oh,
Ramez, I
oh,
see.
oh, oh, they're coming through. Yeah, they're coming through. They're firing away. So somebody asks, where is the risk? This sounds too good to be true.
We get it all the time,
All right.
and I can completely understand. But let me say this. So I mentioned before that this is it will be a publicly traded security. So you have the ability to sell that security. But if you own stock in Amazon or Apple, what do they pay? They pay dividends every month, every year, or whatever that frequency is. This is no different. One of the biggest differences is though for shareholders. Typically, shareholders are on the very end of the totem pole. They typically get paid last. But with the fund, you're getting 10% on your fixed return plus that 70% profit share as the fund performs. Now, to say this is too good to be true, I would encourage you to do exactly what Ramas said. Do your research, do your due diligence. We're a real company. We've been in the industry for over 23 years. Charles Williams, the owner and managing member, has been in the industry for over 30 years. I haven't been with the company as long, but I've been with PR Pioneer Realty Capital now for about 5 years.
Next question pops up. I'm using abbreviations. SY. Is this like a multifamily investment but specializes in student housing? And is there any Section 8 housing involved?
No, there is no Section 8 housing involved. And I want to come back to that portion of it if I can, Ramez, and you
Yeah,
can
please.
correct me if I need to hush on this one.
No.
But it is student housing technically is considered multifamily, but it's a subcategory of multifamily. But it somewhat like multifamily, but obviously we're focused more towards students. But in the fund, you have to remember that our strategy is mostly hinged on us getting a partnership agreement. Now, working with partners like Morgan Stanley, we have also identified other ways that we can achieve the same goal without having that partnership or that master lease agreement from that university. But yes, we're focused in this fund particularly on student housing. No Section 8 is involved, but we do have a nonprofit arm, which is Project PRC, and it is focused on providing the main goal behind it is to keep people from going homeless. So we have eviction avoidance programs, um, rental assistance programs, credit, financial literacy programs through the nonprofit. And while it's not necessarily focused on Section 8, it is focused on helping prevent homelessness.
Nice. Great. So Karen asks, does this investment kick off UBIT or UDFI?
We always encourage our investors with that question to confer with their tax advisor or financial advisor. But the way that it's structured, although it's an LLC, the entity is an LLC, we're taxed as a partnership. So you would receive the Form 1065 or K1. But with that UBIT question, we always encourage our investors to confer with their tax advisor.
What do you think? You're investing in the fund. No reggae. Yeah. Yeah. So, oh, guys, Dennis, come in here, man. It's always rare to get you. So, just so you know, JC, you've never met him, but this is our fearless leader, Dennis Blitz.
Hey,
Karen,
Mr. Blitz.
you walked into the right man. So Karen asks, so it is a reggae offering.
Yeah,
Yes, sir.
I did hear the question. This is a difficult question because, and the reason he's saying, you seek get an answer from your lawyer is because there's no damn clear answer out there.
It isn't. It isn't.
And that's what it is. Yeah. So everyone's going to have a view, and that's my view. This is what I'm going to say is my view, but hey,
Yeah.
you see your lawyer.
Yeah.
So I will tell you that my view is that the individual investor did not sign for the loan, did not seek the loan, and so shouldn't have UBIT. However, we still can't find a paragraph in the code that clearly defines where UBIT begins and where it ends. So
Absolutely.
I think you don't have UBIT, but I'm not the IRS. So
Well,
there you
Mr.
are.
Blitz, I'll second that. I was going to say I don't think as well, but
Yeah.
I'll go with your answer.
Karen, just to keep it simple, the money's moving from your IRA to the fund. The fund deploys the dollars where it sees necessary. That's why Dennis and JC are basically saying to you, we don't know. Okay, we just don't know. But I'm going to be frank with you. The IRS probably doesn't know either.
Yeah, they don't.
But that's just me speaking freely.
Absolutely.
JC, I always give my co-host final thoughts, final say so. If there's anything else that you want IRA Club clients to know, now is the time to do so. Until next time, buddy, it was always a pleasure. I finally got you to come do a webinar with me. All it took was Charles to go, have a full
To
blown
have
surgery.
some surgery,
Yeah,
yeah.
but please,
Well, yeah. Well, again, I really appreciate the opportunity, Ramez. This has been great and it's been fun. And I thank all of your clients who have attended. I thank you all for the great questions. And please schedule some time with me. I don't bite. I like to think I'm a pretty nice person, but if you're
you are.
interested in the opportunity, I'd love to have more conversation with you about it.
The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.